Good evening, and welcome to this brief on the current outlook for U.S. market futures as of Thursday, June 19, 2025. Over recent sessions, U.S. stock index futures have experienced a decline. Today, despite U.S. cash markets being closed for the Juneteenth holiday, S&P 500 and Dow futures each dipped by about 0.4%, while Nasdaq 100 futures saw a more significant drop of 0.6%. These declines are largely attributed to two major factors: persistent geopolitical tensions in the Middle East, particularly the ongoing Israel-Iran conflict, and the Federal Reserve's cautious stance on interest rate cuts. Investor sentiment remains wary as discussions around potential direct U.S. military involvement in the Israel-Iran conflict fuel volatility and a risk-off mood across global markets. Adding to the pressure, oil prices have surged amid these tensions. This spike in crude is a major concern for investors, raising worries about inflationary impacts and potential supply disruptions that could ripple through the economy. On the domestic front, if the Federal Reserve's recent decision to hold interest rates steady, along with Chair Powell's emphasis on data dependence and inflation caution, has reinforced expectations that rate cuts will be delayed. Markets are now closely scrutinizing upcoming economic data, including manufacturing surveys and employment indicators, for any signs that could alter the Fed's trajectory. Despite the recent pullback in futures, the weekly performance for major U.S. indexes has been mixed. The S&P 500 is slightly up by 0.07%, the Dow is marginally down by 0.06%, and the Nasdaq has shown a gain of approximately 1%. Looking ahead, the near-term outlook for U.S. market futures remains cautious. Ongoing geopolitical risks and the uncertainty surrounding Fed policy are expected to keep volatility elevated. In summary, U.S. market futures are currently under pressure from Middle East tensions, rising oil prices, and the Fed's cautious stance on interest rate cuts. Investors should brace for continued volatility as they monitor both geopolitical developments and forthcoming economic data.